A strategic growth mindset places more of an emphasis on infrastructure and sustainability than it does just on increasing sales and revenue. If you want to bring more revenue into a stable operating platform.
Yeah, you got to have those things going together. When you first start a business, the only thing that matters is growth. And you've got to do that for a few years. But then once you start to build your business, then that sustainability, it's like of equal importance. It's easier to retain an existing customer than just to go out and get a new one.
Yeah, and that infrastructure and that stability is what allows you to deliver.
What's up, everyone? This is Aaron Leatherdale here with Own the Exit. Thanks for joining us for another episode. Excited to announce that our primary company, Oak IQ Investments, a real estate and private equity firm, just ranked number 336 on the Inc. 5000 list. There's 32 million businesses in America. So 336 is a huge honor, but it also created an opportunity for us to have some fresh reflection on fast growth because it looks exciting, but it can also be dangerous if you don't know how to manage it in business, in investing, in life. So today, Caleb and I are going to pull back the curtain on the hidden costs of rapid growth, how to balance expansion with stability, and lessons we have learned that you can apply to your own business.
So Aaron, just kind of thinking about, last week.
Yeah.
We had this big party, balloons, our families come in, everybody in the, on the team is here, and we're celebrating, years of hard work, dedication, commitment, getting named to the Inc. 5000 list, which is, for those who maybe aren't familiar, Inc. 5000 is an annual list of the 5,000 fastest growing privately held companies in the country. And out of 32 million, privately held businesses, we were in the top 5,000 fastest growing. And in fact, we ranked 336th. So we're the 336th fastest growing privately held company in America, our primary business, Oak IQ Investments.
Yeah.
And it was kind of surreal. It was really obviously exciting, a lot of energy. We catered in Kansas City barbecue here at our headquarters in Kansas City. All those kind of things, all the team was there. But also it was a really good opportunity, right, for you and I and the team to really kind of reflect on where we've been and also be able to reflect on the challenges that we faced with growing so rapidly and the challenges I think that just business in general faces with rapid growth. And so, the main reason we want to have this conversation on the exit is for all the, business owners out there that are, that are looking to grow fast. There's sort of this allure, right? That just grow at all costs.
Fast growth equals success.
Yeah, exactly. The idea that fast growth equals success, but it's not always the case, right? And so there's this kind of allure to rapid growth, but there are some hidden costs, right? To scaling too fast, to scaling too quickly. And we've had to try to balance that over the last, going on 3-year kind of massive growth uptick that we've experienced as a firm. So let's talk a little bit about just that allure of kind of rapid growth that, that maybe some of our audience could kind of relate to and resonate with.
Yeah, for sure. I mean, super grateful for making this list. I think it's cool recognition, very grateful for, our investors and, customers, team, because it's, of course, a team effort. But growing fast, I think, as entrepreneurs, like I'm kind of wired to just kind of grow at all costs, even like at a financial cost, to just hit growth, even if, you pull back the curtain and you see, you don't have any actual profit, because that's what can happen with fast growth is you just keep putting it all back in, to the business to continue growing, which is a normal part of growing a business. But, some of those, it can add stress to the team. It can add burnout potentially. It can add, fatigue. If you're always trying to push for these milestones and you keep moving the markers. And cash flow. That's one of the biggest things, with, growing a business is it's easy to run out of money.
Yeah.
If you're continuing to reinvest every dollar back into the business for future profits.
Yeah.
And so it's just something you got to balance.
I think it's just important to have a strategic growth mindset versus a grow at all costs mindset. 'Cause I think that's where And we've experienced that where it's just like, oh, we just want to grow this. We just want to continue to build and increase revenues and increase team and increase all these kind of things. But as we, some of the lessons we've learned, and we've made some good decisions, but we've also made some decisions that have created unnecessary strain and stress on the team and, pockets of financial constraints and all those different kind of things that are pretty normal with companies that are growing, especially, at the pace that we've grown. But I think the emphasis that a strategic growth mindset, I think, places more of an emphasis on infrastructure and sustainability than it does just on increasing sales and revenue. It's like you want to bring more revenue into a stable, like, operating platform.
Yeah,
right?
You got to have those things going together. And I just think of, like, when you first start a business, for me anyways, my journey, being a solopreneur by myself, the only thing that matters is growth.
Yeah.
Management, because there's nothing to manage.
Yeah.
But then you've got to do that for a few years.
Yeah.
To try to get, it's your lifeblood, right? The sales side, the outreach, but then once you start to build your business, then it's like of equal importance, like you said, is that sustainability. And so that's something where it weighs on me and is a thought in my mind daily of the management side, of the infrastructure, of the taking care of what you have, and even if, I'm not the person that's building the management infrastructure, I'm more the visionary or on the, growth side, having a team that can do that.
Right.
And putting equal importance on that because, it's easier to retain an existing customer, I think, than it is to go out and get a new one.
Yeah.
Because you didn't care for them, right? Or you weren't able to deliver what you promised to that customer.
Yeah, and that infrastructure and that stability is what allows you to deliver on what you say you're going to do. I mean, it's already in our industry, where we are acquiring, long-term investment assets, things like multifamily real estate developments, right? Those retaining investors and repeat investors being, a part of it, already by nature a difficult thing to do. Because when someone invests in a multifamily development project, for example, the time to value is very long, right? They're investing in something that's a 5 to 7 year timeline on that investment. And sometimes it's, 2 to 3 years before they're seeing any cash flow because we have to build it and do all that kind of stuff. They're getting a huge upside, which is why, our investors love the deals that we do. But it's really hard to get them to repeat because they haven't seen the value from the investment they made 6 months ago already. You know what I'm saying? So
it's very long term.
It's already a challenge specifically in our industry to condense the time to value.
Yeah.
But if we hadn't really tried to focus on strong investor communications, delivering transparency, good communication, seamless kind of painless processes for onboarding and, doc distribution, gathering, signing, all the kind of things that are part of
all the asset management.
Yeah.
All the physical assets. I mean, that's, I like to say, like, when you're buying an apartment complex, it's a lot of work. People don't realize how much work it is to get under contract and actually close on an apartment complex.
Yeah.
But then I always say that's when the real work begins.
Yeah. Yeah.
Because now you've got it for 5 years, 7 years, and you're working that plan, right? And there's no revenue there, right? You're not making the Inc. 5000 because you're doing a good job managing that asset for those 5 years.
Right.
But that is such a critical piece of the business, which is could be overlooked. So it's got to go hand in hand.
Yeah. Yeah. Absolutely. And so I think, the takeaway is, if you're building a business out there and you maybe have a goal to get on the Inc. 5000, or maybe you've done it, you probably resonate with this. It's strategic growth over growth at all costs. I think that's the solution to the allure of rapid growth because, even Small Business Administration, right? The SBA cites that 82% of small businesses, they fail because of cash flow constraints. It's not because they don't have great products or, a great revenue model or any of that kind of stuff. It's that is that they're not focused enough on profit creation and more on revenue creation. And because of that, it creates cash flow constraints. It's they're pouring money constantly back onto the thing rather than actually getting it to where it's a consistently cash flowing business. And there's periods of time where you have to, like you said, in order to experience growth, you have to invest more back into the company.
There's seasons where you'll grow even across like a year. There'll be like quarters, like, Q4 will probably make a lot of revenue.
Yeah.
But for the last 6 months or so, or a lot of the year, it's because a lot of it comes in chunks, just like a lot of businesses. But during those times is actually a really helpful window to focus on the internal
management.
Even with interest rates over the last like 3 years, when interest rates like back in 3 years ago or 3.5 years, when it really started to shoot up.
Yeah.
Our company didn't buy anything for like a year.
Yeah.
But it was a good opportunity to really focus on asset management and figure out a lot of our internal processes and stuff like that without adding new, because whenever you're doing on the sales, like every time if there's a new acquisition or a new, like if you're in a different business and it's a product or you're taking on something, it's like, it creates disruption. Whenever you buy something, because then it's a whole, like an apartment complex, for example, you buy it and then it just, for probably 3-4 months, you're learning it, you're getting acclimated to the asset, you're taking over, you're transitioning to management, you're implementing your plan, If you just don't buy that, your team is able to just not be overwhelmed, you can stagger those. Right. And so I think that's even helpful. It's like you said, the measured growth, it's like, do we really want to buy this right now?
Right.
Because that's going to be work.
Yeah.
And so you have to balance that with the team and, because I think, Inc. 5000 is just, it's a measure within a 3-year period, which is a really short amount of time in business. Yeah. And so I think there's, a lot of companies that they do grow quickly, but then they might not be around in 10 years.
Yeah.
Or 20 years.
I think of our business and industry the same as, when we acquire a new asset, it's like other businesses and other industries launching a new division of their company.
Well, you're like buying a whole bit,
right?
A 200-unit apartment complex.
Exactly.
That's a business.
And although we have
it into your processes and systems, and
we have duplicable processes, systems, and things like that to put in play, but every new asset that we purchase now needs its own team. It's got its own budget. It's got its own revenue targets. It's got all that kind of stuff. So it's managing a separate business. So it's like launching, a business within a business. That's why I said division, right? Because, a lot of times divisions operate as a business within a business. They have their own budget. They have their things that they have, their KPIs, their targets that are tied to the overall company's, overall goals. But
it's a major 5-year project.
Yeah.
Within the business.
Absolutely. So it's a lot of work. And I think, but all of our listeners out there, you guys are not all in real estate, private equity investing. Some of you are selling online digital products, that kind of thing. And some of these challenges maybe wouldn't be as prevalent, but the overall concept and idea remains the same, like strategic growth over growth at all costs. Focus on trying to prioritize cash flow, positivity, outside of growth, right? Like you want to grow, but you want to make sure that as you grow, you're kind of protecting that profit margin and actually generating cash flow so that you're able to keep reserves built up. Especially, I think it's especially important for an industry like ours where we get little drips, but the way we structure it for our investors is they're getting all of the money off of the actual assets that we acquire, especially in the first, several years. And so, we kind of get fees for putting the deal together, bringing it together, and then really where we make our money is on the back end when the deal's successful. And so it's like we got to do a lot of work, and then we get a bigger cash infusion into the company 3 to 5 years down the road.
Yeah.
And then it's so the paydays, if you will, are fewer and further between than in most businesses who have monthly sales and all that kind of stuff.
Totally. Yep. Yeah. Big chunks.
Yeah. So it's bigger paydays, but they're fewer and further between. Think about like relating it, it's real estate, right? It's like relating it to like a real estate agent, right? They're not getting anything like steady income, but they make a sale, they get a bigger chunk, bigger commission off of that, right? And so we do a successful deal, deliver results to our investors. we get paid,
Yeah.
for bringing that value. Yeah.
But yeah, those are really my main points, is just, the thinking of the Inc. 5000 is exciting as somebody who is growth oriented, but then also thinking I want to be doing this for the next 10 years or 20, who knows, and have a sustainable business. And maybe I'm not doing it, but then I sell it to somebody who continues.
Yeah.
And so to have that longer time horizon. And so maybe we continue to grow rapidly for 2 or 3 years. I don't know. But then, some of these more established companies, they're doing smaller gains.
Yeah.
But they have the infrastructure in place, and they'll probably be around longer than anybody else. And so yeah, obviously love making the list. It's a cool recognition. But I think for us, like, we celebrated. We're like, hey, that's awesome. We had high fives all around. There was called the rank reveal, where they revealed our ranking in real time. So that was fun because we were waiting to see where we were on the 5,000. And then after that, lunch was over, and we just went back to work,
Yeah,
and
absolutely.
like, all right, well, I guess we're going to just
go back to work,
continue doing what we've been doing. And so it doesn't really change anything, but it's just a cool moment.
It's cool to, and it's validating to our investors as well that they, that they're investing alongside of a team and a company that's really going somewhere, that's making moves in the market. I mean, I think on that list, we're the 10th fastest growing real estate company in the country.
Yeah.
And so that's, it gives a lot of, confidence to our investors. They know that, hey, we're not a company that's just surviving. Like, we're growing, we're moving forward,
hugely.
And that it gives a lot of stability, because it's like, I know people who have invested, their money into, with operators and groups, a few years ago, that those guys are out of business. Yeah. Right. And it's like, well, they're just barely hanging on, kind of managing those assets until they hopefully exit one day, but then they're done. And so, that's something that's important for investors to know. Like, you're as a company, like, you're in it for the long haul, and you're really, you've got a team that's not just working at the asset level, but it's working to kind of protect that company, to ensure that we're able to continue providing that value, continue bringing that team to the table, to continue to deliver long-term results for our investors. So I think that
we have that same value
of confidence
of the growth and the management, and I just sleep so well at night knowing that stuff's being managed.
Yeah.
And so, it's a huge component of, so we're growing those together rapidly.
Yeah. You've got the vision, you've got the management, and then you've got kind of the integrator roles that kind of sit in between, that connect the high level vision with the day-to-day, work. So
awesome.
Yeah. So absolutely, man. Guys, thanks so much for joining us. This is kind of just a celebration, reflection conversation, trying to provide some value points to you based on our experience of being, the 336th fastest growing privately held company in the country and the 10th fastest growing in the real estate industry in the country. So if you want to learn more about our primary company, Oak IQ Investments, you can check us out at oakiq.com. Oak like the tree, the letters IQ.com. Learn all about what we do, see our portfolio of assets, see our team, bios and profiles and all that kind of stuff, and just get to know us a little bit. And if you're interested in learning more, then just reach out to us. There's plenty of ways you can get connected with us from our website there, oakiq.com. We'd love to talk to you about real estate investing, alternative asset investing, those kind of things. So any kind of closing remarks, Aaron, bring this one to a close.
But yeah, I am grateful, kind of like Caleb said. I think it's cool. The trust that, investors put in us is very meaningful, and definitely is something that we don't take lightly. So that's very appreciated. But yeah, I think, just got to keep going, right? What got us to this point is we'll just continue to build, continue to grow, innovate, manage, build systems,
integrate,
solve problems,
innovate, manage, and grow. That's the things. And also, just big shout out to our team.
Absolutely.
We got a whole team of awesome, phenomenal people that just work really hard, and that all, earned this honor. It wasn't just me and you, it was the team. And so, pretty amazing.
Yep.
All right, guys. Thanks for joining this episode of On the Exit and celebrating with us.